so glad to be back on the show tonight. We're going to talk about the Tax Cuts and Jobs Act, the TCJA. It's called, this was passed by Congress back in 2017. It's designed for creating more jobs, fairer taxes, and bigger paychecks. Once again, the Tax Cuts and Jobs Act, the TCJA. It's for more jobs, fairer taxes, and bigger paychecks. Well, some people might be thinking, well, what does this have to do with what does that have to do with me in 2020 or 2021? And how does that affect me? Well, it affects everybody because in December of 2017, the Tax Cut and Jobs Act was signed into law, representing the most significant tax code overhaul in over 3 decades. MKG Tax Consultants believes in providing valuable resources to help you understand what the Tax Cuts and Jobs Act changed and how exactly it will affect your federal tax refund. That's right. Uncle Sam is coming for you. For your year-over-year, it would decrease your wallet. Your state and the U.S. economy will be impacted. However, we're going to talk about a few resources on how it can and how the tax reform will impact you. You can use our free Paycheck Checkup calculator to keep your year-over-year tax refund. You can visit us online at mkgtaxconsultants.com and select our forms library, or you can watch how to complete a 2021 W-4 on our YouTube channel. Now, in order to provide you with the best expert tax advice, we believe in educating our clients and reducing your tax liability. Some of you might have already filed your tax return, but all is not too late. We can offer a free double check. But what's more important is that you understand the situation that we're in and why your tax refund is not as big as it was the year before and what made this change and what happened. Some of that can be attributed to unemployment, or some of that can also be attributed to the Tax Cuts and Jobs Act. However, our forms library is intended to allow us to better serve our clients and change the outcome of your financial situation. Most tax companies don't provide these forms to put your interest before profit. Use your best estimate for the year ahead to determine how to complete a Form W-4 so you don't have too much or too little federal income tax withheld. But be careful now. That W-4 form is a little tricky. So you would have to use a withholding tax estimator on the IRS website to determine that. Or you can also use our ADP hourly paycheck calculator. Combine that with also looking at your current and most recent paycheck or your prior year W-2 as well as your paychecks as well to see, how much federal and state taxes are being withheld out of your paycheck. Then you would have to complete a W-4 form. But you want to make sure you watch the video that we have presented on YouTube at MKG Tax Consultants YouTube channel on how to complete a W-4 form. Now, the changes to the individual income tax. It lowers most individual tax rates, including the top marginal rate from 39.6% to 37%, and it retains the current 7-bracket structure, but brackets widths are modified, and you can view those on tables that we can provide for you. But to save the discussion of that, the old rate was 10%, but with the Tax Cuts and Jobs Act rate, it's the income tax bracket rate. It went from 0 to 9,525, as well as it stayed the same from 0 to 9,525. That was the current law for a single person. But if you're married, the current law was 19,050, and of course with the new law it was 19,050. Now the 15% current tax rate was 9,525 to 38,700. But with the Tax Cut and Jobs Act, the 12% rate was 9,525 to 38,700. Now this is for a single person. The 25% tax rate for a single person was 38,700 to 93,700 under the old law. The new law is 22%, so it dropped 3%. Now it's 38,700 to 82,500. The old law at 28% was 93,700 to 195,450. The new law is at 24%, so it reduced by 4%, which is 82,500 to 157,500 is your income bracket. Under the old law at the 33% tax rate, it was 195,450 to 424,950 on the income bracket. It reduced 1% to 32% under the new law of 157,500 to 200,000. At the 35% tax bracket rate of the old law was 424,950 to 426,700. It stayed at the 35% tax rate, and under the new law, which is the Tax Cuts and Jobs Act, it reduced it to 200,000 to 500,000. So it basically shaved off $224,950. Now at the 39.6% tax rate, it was for anybody under the old law of the tax bracket of 426,700 and above, and the 37% tax bracket rate under the new law was 500,000 and above. And also for a married couple, it was 480,50 and above for the 37% tax rate. But we can go on and talk about, the tax bracket rate, but just to give you an understanding of what's going on and why you're getting lesser taxes taken out of your paycheck, and why your tax refund is not as big as it used to be in prior years. So we're going to also talk about the indexes, tax bracket, and the other provisions by the chain CPI measures of inflation. It increases the standard deduction to $12,000 for single filers and $18,000 for head of household and $24,000 for joint filers. That was in 2018, compared to $6,500 to $9,550 and $13,000 respectively under the current law. It also eliminates the personal exemptions. It retains the charitable contribution deductions and limits for the mortgage interest deductions to the first $750,000 in principal value, and it limits the state and local tax deductions to a combined $10,000 for income sales and property tax. This is what we're talking about, the SALT tax, where New York fought it viciously as well as Californians. But taxes are paid or accrued in carrying on a trade or business are not limited. Now these limitations eliminates a number of other deductions. It also expands the child tax credit from $1,000 to $2,000, while increasing the phase out from $110,000 in current law to $400,000 for married couples. The first $1,400 will be refundable. Effectively repeals the individual mandate penalty by lowering the penalty amount to zero, and that was effective January 1st, 2019. A few other changes was that it raises the exemptions on the alternative minimum tax from $86,200 to $109,400 for married filers, and increases the phase-out threshold to $1 million. So the majority of individuals' income taxes changes will be temporarily expiring on December 31st, 2025. So it gives us another 3 years. Several, such as the adoption of the chain CPI and the functional repeal of the individual mandate, will be permanent. Now, the changes to business taxes. It lowers the corporate income tax rate permanently to 21%. That started in 2018 and establishes a 20% deduction of qualified business income from certain pass-through businesses. Specific service industries such as health, law, and professionals services are excluded. However, joint filers with income below $315,000 and other filers with income below $157,500 can claim the deduction fully on income from service industries. These provisions would expire December 31st, 2025. So I'm not trying to lose people here. So basically there was a whole bunch of changes in the tax code that went on since 2018, 2019, and now, 2020 has passed as well, where at the end of 2020 for 2021, there was a Consolidated and Appropriations Act that passed for 2021. So there's a lot of changes that went on, to kind of stimulate the economy, to kind of change the tax code. Because remember, the tax code hasn't been changed in over 30 years. But, we did some research, and from the Tax Foundation, by 2024, the dynamic revenue projections are back above the baseline projections, meaning that the federal revenue would actually increase in those years when accounting for economic growth. So in 2026, static revenue projections are also above the baseline projections, largely due to the expirations of many individual provisions. So these results, however, should be interpreted to mean that these tax changes are self-financing. Instead, they'll illustrate that the Tax Cuts and Jobs Act includes a number of revenue offsets to reduce the overall cost of the tax rate cuts included in the plan. So basically, this is to reduce the federal government's debt. We're talking about, expansion, contraction. Some of the economists have looked at this, but, this stimulus money that everyone is getting is not free. These unemployment, checks and benefits that you're getting is going to be taxable on the federal level. And so it's advantageous for those of you that are, I would say, intelligent enough to see, when your refunds start disappearing and vanishing like, like Houdini and just vaporizing, this is the reason on why your tax refunds are reducing, because these tax laws and changes that they passed in Congress allows the employers to take lesser taxes out of your paycheck, and in return it kind of also allows them to either suspend those taxes or pay it forward in future years, as well as we went through a whole year of 2020 dealing with the pandemic. And so you really got to go to a tax professional that's going to break this down, piece by piece, chunk by chunk, line by line, and and making sure you understand why your refund is going to be smaller. There's going to be several key factors that's going to be taken into consideration. One is unemployment. If you have unemployment income, when you get to about the $22,000 mark, and then combine that with your other income, whether it be W-2 income, self-employed income, that's going to, have an effect on how much money you're getting back. Irregardless if you had 2 kids, 3 kids, there's triggers and mechanism here in the tax code that's going to bring that refund, down, because we're paying lesser taxes into the tax system. And so, you might file online. Yeah, you might go and do it on TurboTax or some other site for free file. But guess what? Even though you pay for less, you're going to pay for it in the end. one way or the other, Uncle Sam is going to make you pay for, you know, this, this economy here. And so, it pretty much, kind of plays out to where, you get what you pay for. If you pay for a cheap service, then you get a cheap service in return. But this is not to throw any jabs at anyone, because, these are real life scenarios. These are real life situations. People are out here struggling. People are out here starving. People are out here homeless. People are out here jobless. These tax refunds is serious business. And we take your tax refunds serious. And so if you want to get serious about your tax refund, yes, we need more jobs. Yes, we need fairer taxes. Yes, we need bigger paychecks, and of course, increasing the minimum wage. But there's strategies and there's ways of going about it on how you can maximize and sustain your tax refund, because one time a year is where we get the biggest cash influx into our pockets, which is our tax refund, where we pay down our bills, pay off our debts, buy a new car, or even save up for an emergency fund. This is vital and necessary for families to sustain themselves. But right now, drastic times calls for not drastic measures, but intelligent steps. You have to be intelligent. You have to be open-minded. And if you're going somewhere and they're not giving you this advice and education, you might want to, look and think outside of the box. But once again, this is about the Tax Cuts and Jobs Act, of why you're getting lesser and lesser money taken out of your paychecks, and why your tax refund is going to be smaller year over year unless you change your W-4 and go through the steps of doing a paycheck checkup, as well as a paycheck calculator, and as well as doing a withholdings estimator. So there's a few steps you got to go. It's like from going from point A to point B to point C to your tax refund and taking your money to the bank. If you'd like to learn more about MKG Tax Consultants, visit us online at mkgtaxconsultants.com, or you can give us a call at 559-412-7248. We'd be more than happy to answer any of your questions, any of your concerns. You can chat with us on WhatsApp. You can send us a message. We're here for you. We're open 7 days a week. We're available, 20 hours out of the day. We work late at night, and we're here to educate, inform, and empower our working class and middle class people that pay taxes. And once again, my name is Marshawn Govan, and I'm a registered tax preparer at MKG Tax Consultants.